All right, so once again, ladies and gentlemen, you're welcome to La Prince Wealth Academy. My name is Prince Ikilobe. And today we are going to discuss a very, very important topic. Our topic is going to be about how to identify fake breakers in trading. There are a lot of fake breakers. Fake breakers, how do you know that the market is a fake breaker? Is what this trading is all about. So if you're watching this, if you're on the Zoom call, don't leave the Zoom room. Don't leave the room. If you're watching it from YouTube, stay to the end because you're going to learn a skill set that will be with you for the rest of your life. How do you identify fake breakouts in volatility indices? You can apply this in Forex, but it happens more in volatility indices. How to identify fake breakouts is what this YouTube video is all about. It's what this training is all about. So watch to the end. Don't skip. You learn something that will blow your mind. We're also going to analyze some market. Don't see how we can, identify fake breakout. Then we're going to look at the market together. You and I, we're going to look at the market together and see what you know we can learn from the market today. So let's dive into the trading. Let me share my screen with you. All right. So this is V. This is V. Oh, my voice is off, completely off. Sorry about that. Sorry about that. Sorry about that. Sorry about that. I'm sure you can hear me now, right? Okay. Sorry about that. Please, when did you cease to hear me? Since I started talking, you don't be hearing me. Since I started talking, you don't be hearing me. Yes or no? Oh, since I started talking, since I started showing my face, you don't be hearing me. Oh my God. Okay, since I opened the chat, okay, but you heard me the first time when I said it, right? If you heard me from the beginning, say yes, I heard you. Okay, okay, when you started sharing, okay, 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 good. Okay, good. All right. So it's when I started sharing my screen, you stopped hearing me. Sorry about that. I think my hand mistakenly touched the screen. So we are going to talk about how to identify fake breakers. So this is V101S and this is V101S. Let me look at. Okay, let's see. Let me remove all these things and show you how to identify fake breakers in this is price action. We are not using indicators, we are using price, completely price action. So you need to understand that price action is the name of the game. Don't try to use indicators, robots are not on the If you know how to develop a good robot, that's fine. But I don't think for the real, I don't know, but for Forex, I know people use robots. Most times those robots don't work. It blows the account. To blow your account if you're not careful. So how do you identify fake breakouts? What this training is all about? So let us. This is V75 1S. How to avoid fake breakers? Some people. I mean, if you have uh, analyzed the market, let's say for instance, this is your trend line, right? And what is it? How can we get videos? It's going to be posted on the group. Let's say this is your trend line, all right? This is your trend line. So what did we do when we get the trend line? We tend to buy. This is we are using the higher time frame. This is a 4 hours time frame, and according to the 4 hours time frame, the market is on a buy. Also, the market is on a buy. The market so when the market is on a buy on a higher time frame, what do? You buy on your trend line. This is where you place buys, isn't it? Most of the time we place our buy here, we tend to take the market to the next level. Let me go to daily time frame. The same thing, right? But in doing that, there are times the market will fake you out. There are times the market will fake you out. How do you know when the market will fake you out? Like something like this. Something like this was a fake out. 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 This was the all these are fake out. After the market fake you out, before the market started going up to the upside, and you can see you must have been out of this market completely. It's a fake breakout. Somebody is writing on the screen. Please, can somebody stop writing? What is writing on the screen? Trying to. Okay, I think it's better now. So when you see such fake breakouts, what do you do to avoid this kind of breakouts? This kind of breakout, when you expect to buy from here because you see that the market is an uptrend, and according to an uptrend, what do? We tend to buy from here. According to the training, what do we normally do? We buy from here, right? But for you to avoid this fake breakout, most of the time you have to do this thing. Counter trend line. If you have an uptrend, you have used daily time frame, 4 hours time frame, but use daily time frame to see the direction of the market. Once you use daily time frame to see the direction of the market, daily time frame, the market is doing higher high and higher lows. What is higher high? Price go up, it come down, it go up, come down, it go up, come down. Higher high and higher lows on a daily time frame. This is obviously the market has formed a trend. And once the market has formed a trend, you buy the pullback. But this pullback here, sometimes the market will fake you out. You think you are buying a pullback from the trend line because it has been respecting other time. You think you are buying the trend line. When you buy from this trend line, the market will fake you out. Hit a stop loss before going to the upside. So how do you do to avoid such kind of breakout? You use this standard trend line. You put a use smaller time frame. All right. So now you have used a higher time frame to identify the market. So you go to a smaller time frame. Number one, how to identify or to avoid fake breakout is to go to a lower time frame. Go to a lower time frame. Look at all these are fake out. You can imagine that after faking people out, market even took this high and went to the upside. So to avoid such scenario, you go to a lower time frame like 15 minutes and you draw your trend line like this. Like this. When the price was coming down here, all right? Let's say the price was coming down here. What you are going to do in this kind of scenario is to draw like this is a high, this is a high, this is a high. As it was coming down here, you draw a counter trend line. This kind of case is just a different case. This is very, very crazy. But most of the time, when you draw a counter trend line, you allow the price, the market to break out of this and retest on a smaller time frame. It could be even 5 minutes. So instead of buying here, it pays, but it's very hot. It can give you a fake breakout. So instead of buying here, once you have identified a trend, you don't buy because price has touched this trend line, but it can give you a fake breakout. So you go to a lower time frame and draw a counter trend line. What do? You allow the price to break out of this counter trend line and retest. Most time it even retests back to that trend line. Most of the time, I've seen so many scenarios where price will break your counter trend line and then retest back to the trend line. It happens most of the time. So you use a smaller time frame trend line to checkmate. Let me show you another example. Let's check another trade. All right. For instance, this market. Let me see if I can spot that fake breakout here. So when you see such breakout, what do? You just come back here. All right. You accommodate. You now bring your trend line to accommodate that fake breakout. Once you see a fake breakout, you just use the trend line. All right. You accommodate the fake breakout. What do you accommodate? Like now, it was like this. Let me zoom back. Let me zoom it a little bit. It was like this. This was your trend line. Let's say this was your trend line. Let me zoom it a little bit. So when this such kind of breakout happens, such fake breakout happens, what you need to do is just to look at it and then you bring your trend line. It may not be in line with the previous line. That's okay. Because this market, sometimes you thought market is respecting your trend line. Before you know, you see a fake breakout just happen. Once that kind of fake breakout happens, you bring your trend line to accommodate that fake breakout. You see that that's accommodated it, that accommodated it. So now year two, there was a fake breakout here. Look at what happened here. There was a fake breakout here too. That's why before you buy here, draw this candle trend line with a smaller time frame so that you allow that time frame to that candlestick to break out of this place and retest before you take your buy. Let's try another market. Let me see V50. And V is V100 one is. Let me remove everything. All right, so let's look at the daily time frame. For instance, this is a daily time frame. Let's say you have a trend line drawn like this. Let's assume, but this was the original trend, right? Let's assume you have a trend line drawn like this. And the price go to this level. To avoid this kind of fake breaker that happened, price fake out here, it broke out, but it came all the way down before now started going up. So what you do is, if you want to have this sell, go to a lower time frame. Let's say 4 hours. Because sometimes if you sell here, selling here pays. Honestly speaking, I paid some lot of money through selling here. But to avoid that fake breakout, instead of you to just come here and sell, like to avoid something like this, instead of you to come here and sell, what you would have done is to draw a candle trend line that is like this with a smaller time frame. So I'll go back to 15 minutes time frame to draw that trend line. Minutes is now taking me to that place. Okay, so you draw this with 15 minutes time frame, and what do? You want to make sure that the market, the market, so instead of selling here, it pays. Like I said, it pays. But sometimes it may break out from here and you just stop loss before coming to the downside. So to avoid that, you allow this candle trend line and retest, but not all the time to retest the way you expect it. Like in this scenario, you do not even retest. It just went down up here again. Look at go to our resistance level. And another secret I want to tell you is whenever you are trading, make sure you are drawing your trend line, you are drawing your support and resistance because market tends to respect support and resistance levels. Like now, look what happened. This market broke out of this trend line, broke out completely, went and respected the support and resistance level before coming back. So if you know how to draw support and resistance level, even if the price break out of your trend line as a fake breakout, all right, what you be doing is you will not be asking yourself, okay, where will this market hold? Maybe since like now, since it's not holding here, maybe it's going to get to my support level or resistance level before falling, but it's obviously a downtrend, a downtrend. So you make sure that you have your support and resistance levels well drawn. So how do you identify fake breakouts? Have a lower time frame confirmation with a candle trend line. I'm trying to see a good example of this explanation. A good example of this explanation. Let me see. Okay, for those of you who are watching me, you know that I traded this particular market and I made good profit from it. Why did I take that trade? It was a trend line. I saw this trend line. All right. I saw that this market with a daily time frame. I saw that the market has got into a trend this place. And what happened? The market, I didn't buy here, but buying here would have been more profitable. But like I said, to avoid a fake breakout, you may decide to like something like this small shop. So when price gets here, instead of just buying here, you go to a lower time frame, like 15 minutes, to have a counter trend line drawn. Then you expect the price to break out of that counter trend line and then retest. Again, sometimes when it is retesting almost back to the trend line, to this original trend line, but most time is here. So why I took that trade for this one is because the market broke out of this trend line, it's my counter trend line, and then came back to retest. Yeah, I said, okay, this is when I'm going to place my trade. And I placed my trade and I made some money, but I'm out of the trade already. I want to trade the market to the next level, but I saw that the market is not as strong. The buyer side is not as strong as the way it used to be. So it may be that the buyers are trying to fake some people out and then sell the market back to the next level. So that's why I did not take that. I did not hold that particular trade for long. So this is how to identify fake breakers. I don't know if you guys understand what I'm saying. Somebody is reading it down. Good at me. Are you getting? Do you understand how to identify fake breakers now? If you know how to identify how to get fake breaker, how to identify fake breaker, can you type 111? If you now understand how to identify fake breakout, type 111. When you see fake breakout, what you do is just come back and accommodate that fake breakout. Accommodate it. Like now, this is the original line. If I'm looking for this market to sell for me, I have to make sure that, okay, good. I have to make sure that the price break through this particular red line. All right? Because I've accommodated all these fake breakers. All these fake breakers, I've accommodated them. And now it is for the price for me to sell this market, it has to break through this trend line and retest before I'll say, okay, it is a buy. And for me to continue my buy also, right now, I can't even buy now. This is middle. I can't even buy. Don't try to buy on the middle like this. Don't try to buy on the middle like this. It's very risky when you buy on the only place you can buy is down here. This side here. Here. Fake breakout and retest. This place is good to buy. Like here was a good place to buy, but all these places is not safe again. Doesn't mean you will sell. No. Stay out of the market. Since the market is an uptrend, the only time you want to sell is when the price breaks through this downtrend, this uptrend, and retest back to this trend line. Then you cannot sell. So guys, this is what I wanted to discuss today. Tomorrow we're going to have another session. So right now I want you to ask me questions. Let's do question and answer. Maybe let me. What time frame are we using for retest? Breakout and retest can use, like now, if you are going to be waiting for breakout and retest, use for this particular trend line, this trend now, go to 4 hours and wait for breakout and retest. All right? That doesn't mean that you have to use 4 hours to enter the trade. No. Once price, this market may likely, the way the buyers, because the buyers are not strong again. So if the market is going to come down, as you are watching this market, once it is getting close to your trend line, once the market breaks, go to a smaller time frame. Go to a smaller time frame and look for a breakout, smaller time frame like 15 minutes, 5 minutes, to see break it out and retest back to this trend line. If it break out, meaning once price break out, there will be some sells. It will sell. Don't rush and enter because it could be a fake breakout. To avoid that fake breakout, this is what I mean. When you see market break through something like this, let's say you see the market coming down, you just rush and sell. But before you know it, price will just go to the upside. And it has taken you out of the market. Because you saw red candlestick coming down and you thought the market was going to go up and go down. So you just enter. So when you see something like this, if something break out, instead of the market to keep going, go back like this, what you do is just shift your trend line back to accommodate this one. That's all. So for you to sell this market, you need to allow the market to break through this trend line. And then sometime when you break through the trend line, it will do something like this. All right. So let's wait for this market. Be using 4 hours time frame to draw, to see your trend line, to see the direction of the market. Since this market has been an uptrend, the uptrend is coming to an end. The buyers are no longer strong. So we are waiting for this market to either break out of this yellow line. If it takes yellow line and come back to retest here, we'll buy. But now that you cannot even take the last high, it means that the buyers are soft. The buyers are no longer strong. So let's look at selling opportunity as well. But we are not yet selling. The only time we can sell is when the price comes back to this trend line, break it. If you come back to this trend line, you cannot say, okay, I'm going to put my counter trend line because I don't want problem. You put this. So if it breaks out of your counter trend line, the test, you can see good for a buy. But if it does not, if you come down to this line, break through it, allow it to sell, have some sell-off, then let it come back here. If it retest, you buy. If it does not retest, let it go. If price does not retest, let it go because that is a trap. All right. So I don't know if there is anybody who has any question. Let's. Any question? Any question? Any question? Any question? Anybody has any question? Any question? Let's. If you are confused, please can you ask your question? If you are confused, please can you ask your question so that we can call it a day. Today we'll close early. But if you have any question, please kindly indicate. Okay, do you have a question? So I shall meet you. Okay, okay, let me unmute you. Ask a question, okay.
Good afternoon, sir.
Yeah, good afternoon.
Sir, please, what I'm trying to know is that the entry price, because what I used to use is stop loss and the take profit. That is really what I used to use and enter my trade. If the trade is going to my direction, that's what I used to use.
I don't understand you.
Like the entry price, I don't used to use the buy limit and the sell limit. Actually, I don't used to use that one.
So which one do you use to use?
What I used to use is that if I put my trend line finish, I will now know the direction of the market. If the market now show me the exactly direction that is going to. I will now use the stop loss and the take profit. I don't used to go through to that buy limit and sell limit.
You must not use buy limit and sell limit. Too. I'm not saying that you must use buy limit and sell limit. There are some trades you use them, but not all the trades.
Okay, 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 okay.
It's not more that you use buy limit and sell limit.
Okay. Thank you.
You're welcome. So is there anybody with any question? Any question? But we'll come back here tomorrow again, same time, same Zoom link. So in Washington, so in Washington for breakout and retest, are you saying we use higher time frame such as powers to watch it? Yes, use higher time frame to watch it. Let it get to your zone. But once you get to that zone, use lower time frame to expect the breakout to happen. Let the breakout happen. If you use 4 hours time frame to watch the breakout and retest, you may not enter the trade early. It must have gone far. So many things must have happened. So use smaller time frame to allow the breakout to happen with the smaller time frame. But make sure that the line itself, the trend line itself, is a trend line of daily time frame. Let daily time frame give you that trend line. If you break out from your daily time frame trend line and retest with a smaller time frame, you know that okay, this market is likely go to the direction it has been tested to. That's it. Can we use 1 hour for the break and the retest? Yes, you can use 1 hour, but break and the retest, using higher time frame to see to the break and retest, it's not bad, but it will also make you enter the trade long and late. So me, I personally like to use lower time frame, like 15 minutes to see the market breaking out, and then sometimes even bring to 10 minutes, 5 minutes to test back to that line that it broke through. Then I will buy or sell. Because higher time frame will make you enter the market late. For scalping, can you use small time frame to draw the trend line? Don't be using trend, don't be using small time frame to see the direction. Even you want to scalp, use daily time frame to see the direction of the market. So if you are scalping, yeah, you can use small time frame to draw a trend line, of course, but at least you scalp in direction of the overall trend. If the market is an uptrend, you should be scalping to the upside so that you don't get cut off somewhere. Don't go against the trend. When the market is an uptrend, the only time you can go against, let me show you something. When you can go against the trend, when I can go against the trend is this. All right. I am in a buying market, in a buying market. So if the market is an uptrend, according to the daily time frame, when I will sell, I sell on channels. Let me show you. You see, this is a channel. It's an uptrend, price come down. This is the buying place. This down is the buying, right? Now you have to draw a channel like this. Once you've identified an uptrend or a downtrend, draw a channel like this. So what will channel help you? This channel is where you sell. When you see that price has taken this high, this particular high, and then you draw a channel, so you expect that if this high has been taken, then this channel, that time all this must have not happened. Remember, this is not yet there. Once you draw a channel and price go to this here channel, because it has taken all these lows, all these highs, if price gets here, most likely to reverse back to this trend line to allow more people to jump on board. So when it's this is where you are supposed to sell. So you can trade against the overall trend only when you are using channel. So when you are trading with the channel, you can sell. Like now, somebody can sell here. Why? Because of this channel. Price respect this channel. To come as it's going up and down, you respect this channel. And sometimes to break out, but most times it respect the channel. So you can sell in a buying market on a channel that is respected. So that is it. Always trade in direction of the overall trend, except you are selling or buying on a channel that price is respected. All right, guys. So without wasting much of our time, let's call it a day. Let's call it a day. And tomorrow again, we'll come here again and we start the trading. We'll continue the trading tomorrow. So I want to see you again tomorrow. Once again, learn the skill set, practice, practice, practice. Fund the account. You can't be doing demo. If you are still doing demo, you're not serious. If you are still doing demo, you're not serious, except you are just starting. But practice with real account, and then after a while, start with demo. I mean, practice with a demo account. Then after a while, start with real. Even if it's $10, $20. However, it's small. Not wait till you get all the money. No, start from somewhere. It's better for you to blow your $20, your $50 than bringing $500 and you blow it all. So start with something, get momentum. Then you can ask, okay, let me fund $500. Let me fund $1,000. You can use $10 to flip, $20 to flip, flipping open multiple positions, big lot sizes. If it goes, no wahala. You come again next time. That's it. All right, guys. At the junction, I say thank you for coming, and I'm going to draw the curtain. And I will say good night, good day, have a blessed day, and bye for now.